to the Kick-Ass Relationship Show. Today we are talking about a topic that I have a lot of clients coming to me about, and it's about money and finances. I have a lot of clients who, we all know the biggest reason for divorce is over financial issues. So one thing that I work with my clients on is how to think outside of the box, how to take a budget and an income that is just kind of the mainstream and how to make a nicer living off of that. So that brings me to my fabulous guest, Mr. Chris Stafford. He is an absolute guru as far as real estate investing goes. He's been doing this for over 27 years as a real estate broker. He even coaches, and he has a mastermind that is focused on helping real estate agents and brokers become even more successful because he knows so much. And he was even a CPA for PricewaterhouseCoopers way back in his past life. So join me in welcoming Chris to the show. How are you, Chris?
Never better, Midori. Thanks so much for having me on.
I'm so happy to have you here. So let me just give people a little bit of a background. I met Chris at a business event a few months ago where were we? We were in
Connecticut.
In Connecticut. And I talked to him for a short while. I'm like, this guy's pretty freaking smart. I want to know more. And it was so much fun. And so that's why I invited him on the show. But really, Chris, we want to talk to you about how can we go from just being, making a normal income and stepping into becoming real estate moguls, or if not a mogul, a real estate investor, and helping us increase our income and our wealth, and even let's start with why should we even be interested in real estate?
Yeah, I think, that's a really good question. And for a lot of people that are in a relationship, I think maybe you own your own home and you think that's as far as you could go in terms of investing in real estate. But one of the things that I have found personally over the years with my partner and I is that you can build substantial wealth with real estate, and it's a lot better and it's a lot easier frequently for a lot of lay people, if you will, to get real estate as opposed to stocks and bonds. I know when my stockbroker calls me and asks me about, do you want to invest in this stock or that bond? My eyes just sort of glaze over, and it's just like I have absolutely no desire, no interest to, really participate in that conversation, unfortunately. But with real estate, it's a tangible asset that that most people really understand. You buy a good property, you rent it out. There's certain issues involved with that, but it's something that you can really sort of wrap your brain around. It's a lot easier for couples to, get into real estate. And it's also a great thing for couples to do together when they're rallying around a piece of real estate.
Okay, so let's get real for a second, because that's the only way that I go. I was involved in the 2008 real estate bubble. I was thinking, okay, awesome. We are going to be set. We are so comfortable in our older age, and then boom, everything fell apart. So how do we do this safely? Because it's, many of my listeners, they own their home, but then how do we get it to the next step and avoid some of these things that can happen, or at least lessen the chance of big negative things happening?
Well, I think that one of the key things, the key assumptions that couples have to go into when they're talking about investing in real estate is that it is a long-term investment. There's a couple points about this. One is that as long as you know that you really need to hold your real estate for at least 7 to 10 years, then you will, and you can work out the numbers accordingly, then you will sort of circumvent all the ups and the downs and don't get too crazy about that. Because, just like stocks and everything else, it's very difficult to time the market. So you really want to make sure that you're investing in a good market and a good piece of real estate, but know that you're not going to be selling this thing in 2 years, that you're investing for the long term. Because over time, real estate has proven without a doubt that it is a great investment over the long term. Where people get really stuck is when they buy something and they think, especially the flippers, somebody that thinks that they're going to buy a house, especially this is very dangerous in a lot of markets right now, and then turn around for a quick buck and sell it. Not saying you can't do that, but that's just a lot more dangerous. My philosophy has always been find single family homes. Now, this is not for everybody, but find really strong single family homes in really strong markets that look good. The economics of that market, that city, look good in the long term. And then the other thing that I just want to add too is one thing that I think makes a lot of sense to me, and I've been investing in single family homes around the United States, is if you're living in a really high-end market, like those of us that are living on the West Coast or the East Coast, you don't necessarily have to invest in real estate right in your town. If you're living in LA, New York, Miami, or Washington, DC, or New York, it's, it's really daunting, just the prospect of having to buy a piece of real estate, a single family home, and then rent that thing out and cash flow it, make money doing it because it's so expensive. And the rents aren't as great, for you to cash flow the property. So consider checking out other markets across the country that are very strong markets, have a really strong local economy, and are a lot cheaper, and it's a lot easier to cash flow.
Okay, so I love that idea, but let's visit that for a second, because I know that back in the early 2000s, people were doing that. They were going to random places in Detroit or in Texas or wherever, and then without looking at the property.
Mm-hmm.
And then all of a sudden they're like, oh my gosh, I own nothing, because it was absolutely worth zero. It's just that it was such a hot market. People were buying up things. What are some ways that we can step into buying property, or even to start researching where to find these markets that are up and coming?
I think that one of the easiest, best ways to do is have somebody else do the research for you. And, in full disclosure, I used a company, and maybe you can send a link to your listeners, but I used a company called ICG. ICG is a really great company that actually does that research for you. It goes around to the different markets across the country to determine what's the best market for you. And they also tell you like what's a good deal and what the local economy is, because I truly believe, Midori, that we don't really have one national real estate market. We have these little micro markets all around the country. And it really just depends on, what the local economy is and what the companies are doing. Like, for instance, before I investigated Oklahoma City, and the funny thing is a lot of the real estate markets that are good to invest in are sort of these really boring markets. It's like, nobody wakes up in the morning saying, hey, I want to invest in Oklahoma City. Uh, but Oklahoma City is like the headquarters for natural gas. There are so many national headquarters there. It has a really good work population, low unemployment. Their prospects for long-term growth are really good. So all these factors you should take into account before you invest in a property, and not just on the whim of somebody telling you, oh yeah, hit Las Vegas or hit Phoenix, because those are really hot markets, and those markets both have tanked in the past. So ICG is a really good one, but there's a lot of information on the internet to really research. Again, you want to understand what are the long-term prospects for that local economy that you're going to check out.
Okay, so let's say we've done our research, we've hired a company, or we've done our own research, we know where we want to buy, but our income is, I want to be careful with income because it's all relative, depending on where you live in the United States. And so, let's just say you have kind of a median sized income, and you have typical expenses of family. What are some creative ways to start investing in real estate if you don't quite have that 20% down to avoid the PMI tax or the PMI insurance? What are some ways to get in without leveraging yourself too much?
Without leveraging yourself too much, yeah, that's a really good question. So if you don't have the 20%, there's a couple of different things that you can do once you identify a market. One is you can partner with people. And I have done this on many deals where I actually find somebody, if I don't have the cash, find somebody that does have the cash and partner with them. And you can work on an arrangement to invest in the property together. That's one thing. And by the way, I want to say really emphatically, Midori, any advice I give you, make sure you check with your own investment advisor. Don't hold me up responsible.
I'll give you his phone number at the end of the interview.
There you go. But no, the other thing, another idea is there are tax loopholes, if you will, where you can use your IRA. You can use your retirement plan to invest in real estate. And I know that that's something that was just introduced 2, 3, 4 years ago. So there's another thing called equity sharing. This is what I've done. I did this for a couple properties, I got about 10 years ago. Where equity sharing is that basically you enter into a written agreement with another party that has the cash. And I always like using other people's money. But if you enter into an equity share agreement where that person buys the property, they come up with the down payment, and then together you guys qualify for the mortgage, and then you make the mortgage payments. You run the property. So basically, you're going to manage the property. You're going to make the payments. You're going to find the tenant, collect the rent, and do all that. That other person is actually going to buy the property for you and use their cash as a down payment. And then you have a set term agreement after 5 to 7 years to probably sell the property, which is what mostly happens. Sell the property and you split the proceeds. So there's a lot of different ways that you can do it if you don't have the cash, and also sort of spread out your risk as well with the property.
So how do you find someone who is interested in doing that type of investment with you? That type of partnership where they buy it essentially.
No, I think that ICG has that. If you get on their mailing list, they will give you information about people. Your own sphere of influence, talk to granddad or talk to your parents or talk to friends that want to make a real estate investment. And just go online. I believe that there's some equity share organizations in the country that will hook people up. I would just Google equity shares.
Okay, so equity shares. This will all be in our notes, just by the way, at the end of this. So for those of you who are frantically trying to write this all down, we will have this in a blog post, so you can find it there. So talk to us a little bit about like REITs. So define what that is, and then tell us your thoughts on that type of investment.
I think REITs are BS. Any other questions?
Okay, so there you go. REITs stand for real estate investment.
Real estate investment trust.
Okay.
So real estate investment trust, and I'm kidding. I mean, for a lot of people and a lot of serious investors, and especially for a lot of people that have a lot of money, a real estate investment trust can be something that I guess could be attractive for you. A real estate investment trust, just picture that almost sort of like a partnership, if you will, of a bunch of people getting together and buying a piece of property. One of the things that, and it can be lucrative, it really just depends, but they tend to invest more in commercial properties, like office buildings or McDonald's or Jack in the Box or something like that. And one of the things that I have a problem with it, and again, this is just me from a personal standpoint, Midori, is that I have a problem with it, is that I think it's really important that you know what you're investing in. And a REIT is very impersonal. You could possibly have thousands and thousands of people investing in it. It's strictly governed by the SEC, the Securities and Exchange Commission. And so it has to have a huge management team in place that has to be paid. And if you're investing in commercial property or, office buildings or, large, like 180 unit residential buildings, it's going to take a certain sophistication as an investor. And me and my little 80 IQ brain, I sort of understand very well because I've been in real estate, but it's not hard to understand, a single family house. You buy it, you rent it, you fix it up, that type of thing. So I would say you just want to be really careful with REITs and invest in what you know and what you really thoroughly understand.
Super sound advice. And I think it's easy to get caught up in some of the shiny objects that are out there. So thank you for sharing that. Mm-hmm. Talk to us a little bit about the difference in an investment property and then your own home. So how that's set up a little bit.
Yeah, well, I think that a lot of people treat their own homes as an investment. And for those of us that are living in high real estate areas, high priced areas, it's probably even a substantial part of our net worth. And so, but the bottom line is I always feel that you can't really look at your home as an investment because you just need a place to live. And it is something that is really important to you to have a place to live. It's one of the basic needs that we all have. So an investment is something where you can just buy a piece of property. If the property is flooded, like my house, and I bought 3 houses in Baton Rouge, Louisiana. And
Oh,
I don't know if you recall, about 2 years ago, there were huge floods down in Baton Rouge. And the funny thing is I bought the places in Baton Rouge because I didn't want to be down in New Orleans where the flooding happens. And Baton Rouge had like a 100-year-old flood, destroyed all three of my properties. Um, but so obviously, when a flood destroys your investment property, you have insurance. It's not as great of an impact on your personal life as something destroying your personal home. So you treat it just like any other investment. But again, I think that the most important thing, because you're not really going to be objective about your personal home. You're going to be a lot more emotional about your personal home. You're probably going to spend way more money fixing up a kitchen for your personal use than you would in an investment property. So, for lots of different reasons, your personal home is not really an investment in my mind. But an investment property, hopefully, you're going to understand it really well and make smart financial decisions with regard to it. I don't know if that answers your question.
it does, yeah, it does. And then to purchase an investment property, there's some differences there, aren't there, as far as what you need to put down and what the banks look at? Can you talk to us? Do you know much about that part of it?
A little bit, yeah. So there are stricter guidelines when you're purchasing an investment property. One of the things, for instance, is, and it really just depends on a lender by lender basis. So there are some lenders that are doing 20%. If it's an investment property, most of the lenders currently right now are requesting like 25%. Some even want 30% down. Um, there is a limit on the number of mortgages that you can have right now, personally. Excuse me. So I do believe, don't quote me on this, but I believe that the total number of mortgages that an individual can have is 6 mortgages in the country. So if you're investing in more than 6 properties, you'll have to find another way to creatively finance that property.
So let's
Um,
talk about that for a second. I just want to pause for a moment. So let's say you get into this and you have investors that you're working with and it's going really well. So you keep on buying these properties. So let's say you have the 6, you have the max that you can.
uh-huh. Mhm.
If you set yourself up as a business, so whether it's and I don't know these answers, but an LLC or a trust or a corporation,
Mhm.
does that change the game a little bit?
Probably not. Now you're getting into an area that's a little bit legal. I think that if you're a corporate, I can definitely tell you if you're a sub S or a limited liability corporation, no, that's not going to change the game at all. But if you're a corporation, it's possible that under certain circumstances, you might be able to get another mortgage. But one way around it, though, would be to find other investors to help you invest in the property. So, if you're already at your 6 max, you could bring somebody else in and get another 6 mortgages and another 6 properties. So there are some creative ways that you can use to use other people and use other people's money to find properties more than the original 6.
I think you're like the new age rich dad, poor dad. What's his name? Robert Kiyosaki?
Kiyosaki? Yeah, Kiyosaki. Yeah, but which one is prettier, Midori?
Oh, that, of course you are, Christopher. These are great tips on how to get started.
Yeah.
And
And I think that one of the other things too, then I think this is really, really important too, is I know that you talk a lot about relationships and couples and all that. I think that if you are doing this with your partner, with your wife or your husband, it is vitally, vitally important that you really understand this together and make sure you're both invested in this, emotionally together, and make sure you really understand what you're doing. I've heard so many horror stories of the wife just leaving on the husband's back or vice versa, and I think that this is really a great way, and I've used this personally to strengthen my own relationship. It's really a great way to have another aspect of your relationship out there that you can do together, understand together, and it makes it a lot easier to bear the highs and the lows when you're investing in real estate, when you're doing it with somebody else.
thank you so much for bringing that up because that is a huge thing. Some people are more risk adverse,
Hmm.
and so by creating this clarity and this understanding, and knowledge is power, right? So it comes to it's the same thing in a relationship. When you can view these investments as something that is going to be helping you towards your future, making it so that you aren't as open to financial um, issues. It's a mindset, but when you can work together on that and you come at it from the right standpoint, and you understand each other's risk levels, mental risk levels, that's huge. And so that is a big, big point, because I have a lot of couples who come to me where one person is opposite of the other as far as their risk adversity. And that can create a lot of tension. But once each person's clear on that understanding, and then also the way that they communicated about it, it can open up a lot of doors and a lot of opportunities for them. So
absolutely, because I think the other thing too, Midori, is that you really, that's an excellent point. And the other thing also is when you're buying a property, when you're managing a property, you're spending a lot of time doing it. And if you're just doing it by yourself, it's not going to be as rewarding as doing it with your partner, where your partner is understanding why you're spending so much time doing it, or maybe they can relieve some of the burden. And it's just a great thing to do together, and it makes it a lot easier when you both in on it.
I agree. And I think just starting small, start with one small property, see how it goes. And also keeping that mindset that you said in the very beginning. This is a long-term investment. You can't get freaked out if you see the market. I know interest rates just went up today or yesterday, and that affects things. But you got to understand that this is a long-term investment, and history has proved that real estate tends to be a pretty safe, overall safer investment for people.
In the long run.
In the long run. Okay, so Chris, tell us, for those people who, I know that everyone is like, okay, how can we find out more about Chris because we love him? Tell us about your book. You have a book out there.
Massive Abundance.
Yeah, Massive Abundance. Tell us about this book.
Yeah, so it's a book called Massive Abundance, How to Create Passion, Purpose, and Prosperity in Your Life. I wrote it with one of my dear friends it's been about 10 years now. And it's on my website. My site is called epiclistingagent.com. So if any of your readers or listeners, if you're reading this or listening to this, just go to epiclistingagent.com and hit me up and say you want a copy of the book, and I'd be more than happy to send one to you immediately.
I'm going to get one. In fact, I'll come pick it up. I'll come personally pick it up.
I'll share you're going to want me to sign it too.
I just might, and I want you to sign it with a really pretty pen.
All right, you got it.
Okay, sounds good. Thank you so much for this, Chris. I know that just these kind of conversations open up people's minds, and the opportunities are out there, and I think you gave some really good tips on how to do it safely and intelligently so that it's not as scary. So I appreciate it. Thanks so much for being here with us. And until next time, we will have another fabulous guest giving fabulous information. Remember the gratitude attitude. Show those who you love, those who you care about every single day, one little piece of what you are grateful for, and you will see your relationships and your life blossom.